Hello there, this is James and you're watching Tixee Live. And a very happy Tuesday to all of you and a very good afternoon. Right, in today's program, I want to have a little chat about Netflix. I talked a little bit about it this morning, but this is the sort of earnings announcement the market is waiting for today with bated breath. Plus, I want to talk about a couple of other things, including a particular rumor which is going around, and a couple of other sort of recent comments and other factors for which is affecting the market. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So I briefly spoke about it this morning, about Netflix. Obviously, because I say we're now in the height of earning season, which is a big deal. And now we're about to go down the road of tech companies. We've got most of the banks out of the way. We concentrated on the banks first. Don't forget, we had JP Morgan Chase last week, along with Morgan Stanley, Wells Fargo, Citibank, and obviously yesterday had Bank of America and Goldman Sachs. Now it's the time of tech companies. And to start us off with, we have Netflix. So yes, Netflix is supposed to report its Q2 earnings, and it's been released after the market close. Now, revenue expectation from these reports is to show a revenue of $8.03 billion and $2.96 earnings per share. Now, Q1 revenue, which was not a good earnings report for Netflix, showed a revenue of $7.87 billion against the expectation of that time of $7.93 billion. So yeah, so there is a lot of apprehension about Netflix's earnings report coming out today. And I think the main problem that Netflix is struggling with is the fact they are struggling to find new subscribers. Because obviously, you know, they really benefited a lot during the lockdown period when everybody was stuck at home and nothing better to do but to watch television. So obviously they actually really benefited that. But since then, they're struggling to find new subscribers. And as well as that, there is a big growth in competition. We have the likes of Disney Plus now, Amazon, for example. So here's the thing. And let's say, here's some facts to go along with it. In 2020, Netflix managed to pick up 36 million customers. Again, it makes sense. It was the height of the lockdown. However, in 2021, they only managed to pick up 18.2 million new customers. That's a big drop-off from 36 million the following year. Now, in this report, it is expected that Netflix will announce a loss of 2 million subscribers. This is what the market is expecting, a loss of 2 million subscribers. And in fact, the streaming giant has lost 64% of its market value so far this year. Just to give it some other numbers to sort of like, how Netflix is really struggling at the moment. Netflix market valuation was 300 billion. 300 billion is now under 90 billion in less than a year. So yeah, as you can see, as you can tell, there is a lot of concern about these earning reports. And let's have a quick look at where Netflix is at the moment. Let's have a quick look at this, where it is at the moment. Now, obviously, the US session has just opened. It's currently trading at 191.22 cents. So obviously yesterday, with the anticipation of this earnings report on the horizon, it did experience a bit of a sell-off. It still remains under pressure, currently trading 190.79. So like I say, you know, how bad is this report going to be? I think the market is already sort of taking it into account that they're expecting a negative a pretty negative earning report. But how bad is it? How bad is it? Now, obviously, there is talk that Netflix are planning to change their business structure. Like, again, I mentioned it this morning that Netflix are planning to sort of cap on the free passwords. Not free passwords, of course, but the passwords being shared by families, because they reckon there's about 100 million households who share passwords. So that's 100 million extra subscribers, potentially. 30 million of those are in US and Canada alone. So there is talk of them sort of, trying to do an additional fee for sharing passwords. I think they're going to focus that on in South America first as a test run. Plus, there is also an advertising model they're looking at to make it cheaper. Whereas, for example, if you pay a certain price, a cheaper price, you have to have adverts. So there is that as well, which they're looking to do. But really, this is going to be the big one, potentially a big one. So it needs to see how bad this report is. Is it as bad as we anticipate, or is it even worse? So yeah, that's the thing. And it, like I say, it kickstarts the earnings season for tech companies. Like I said, we got Snap on Thursday coming up as well. Tesla tomorrow. Okay, that's manufacturing. But we've also had Twitter on Friday, which I think is going to be an interesting story as well. So I will take a look at Twitter on Friday as well. But anyway, all about Netflix today. Let's see how many people are still watching. So let's move on to other news. EU. I mentioned the CPI today. Was expected at 8.6, and it did come out at 8.6 as expected. And I'll bring up the euro in a minute, because the euro is looking quite interesting. It's doing something, and there's a reason for it. The euro initially, on the back of that, as it was anticipated, didn't really react to the CPI. It's not like the US dollar or the British pound, who react a lot to inflation. But there was something else which broke. A little rumor. We have these rumors at the moment. Can you remember a couple of weeks ago, we had a rumor from the Fed that they were going to raise 75 basic points. We all expected 50, and then this rumor came out at 75. And hey, presto, guess what? They raised it by 75. Well, we've had another leak, similar. A leak report by Reuters has given the market the impression that the ECB will surprise everybody and raise rates actually by 50 basic points, not 25. For all they've been saying for the last couple of weeks, especially Christine Lagarde, don't forget, who I consider queen of the doves. All they've been saying is 25 basic points, 25 basic points. But now the rumors going around that they might do 50. In fact, the market, under this leaked report, under this rumor, the market is now priced in a 60% chance of a 50 basic point rate hike on Thursday, followed by another 50 basic point rate hike in September. So this is quite an interesting rumor to come out, because I've always been pretty dovish with the ECB. I thought the ECB's lack of action so far has damaged the euro. But like I say, if they are going to be a bit more aggressive, then it's going to greatly surprise me a lot. But let's have a quick look at the euro now, because it is doing some interesting moves. Let's have a look. Let's bring it up on my chart now. Now, as you can see, currently, okay, this is on a 30-minute chart. It's currently trading on the back of this rumor. It's currently trading now at 1.0245. Okay, it's a key level which I'm watching at the moment is 1.02684. That's the next real key area of interest if we keep this bullish momentum. Okay, it is under the RSI, just under the 70 at the moment. It's on the 30 minutes. We'll look at it daily in a minute. It is above the 100 and 200-day moving average. So in the short term, it's sort of indicating a bit of bullish momentum. If we look on a daily, okay, this is a complete turnaround, of course. Not saying that this is turned around completely, because I'll talk about that again in a moment. But it's obviously a complete bounce from where it hit parity a couple of trading sessions ago. But if you look at on a daily, yeah, it's that key level of 1.2684, then followed by 1.2921, which again is a key area of interest if we can keep this bullish momentum. And like I say, whether or not this rumor is true, will it surprise it? When this similar rumor broke out about the Fed from, it was in the Wall Street Journal said this, don't forget, on the Monday, a couple of days before the Fed announcement. It did end up proving to be true. So yeah, that's how the euro is doing at the moment. So yeah, let's see if that rumor comes true and they surprise everybody, including myself. What else? What else is happening? Okay. Something else I want to share with you. A question I want to ask: is there another nail in the coffin for the Fed to increase interest rate by 100 basis points rate hike? Why do I say that? Well, if you remember last week when we were talking about after the CPI, it's Friday, the market started to cool because on Thursday, after that shocking 9.1 CPI reading from CPI reading in the States, 9.1, the market straight away went to dollar bullish, because they straight away jumped on the bandwagon, or the conclusion, because of that high CPI number, that the Fed will raise interest rates by 9.1. But then I said on Friday that started to cool. That started to cool down, okay? And on Monday we saw that basically the market then went from, on Thursday it was an 80% chance of 100. The market was thinking an 80% chance of 100 BPS rate hike. It went down to 29% yesterday of 100 BPS rate hike. And there's a reason for this, because one of the reasons, Fed member Waller, remember he said, and we spoke about this on Friday, he did say if retail sales and housing data was materially stronger, he would back 100 basis points. He said in his initial speech, he's going to go for 75. He's back in 75. However, he said if retail sales and housing data was materially stronger, he would back 100 basis points. On Friday, of course, we had US retail sales, which on paper looked impressive, but when you broke it down, it wasn't overly that impressive. So this is why the market thinks, no, they're not going to do 100. But again, what did he say? Housing data as well. And we've had some housing data today, which is a bit of a mixed bag. US house starts announced at 1.559 million, lower than the expected number of 1.585 million. So not marginally stronger. Building permits, slightly better, though, announced at 1.685 million versus 1.65 million. So a mixed bag, but both are not marginally stronger. So straight away, the market is going down the line for the same sort of mood as it was yesterday, that no, we're not going to do 100 basis points, and we are seeing slight dollar weakness. So let's have a quick look at, say, a couple of currency pairs against the dollar on the back of the housing data. The cable, starting off the British pound, US dollar. This is on a daily. As you can see, like the euro, it's managed to bounce back against the dollar. It currently is really still testing that level. I've been watching 1.20034, though it is trading slightly above that at the moment. If you look at the 30 minutes, it's hovering around this level, around 1.20034. So currently trading at 1.2028. So yeah, there you go. We're saying again, we've got dollar weakness against the sterling. If we look at the dollar yen, remember it was all about the dollar yen at one point, 23 high against the yen. Well, that was sort of a couple of days ago. It's currently trading under pressure against the yen, 137.56 against the yen. On the daily, if we look at a bigger picture on a daily, as you can see, okay, overall, and again, this is mainly down to the fact that the BOJ are not going to do anything in relation to interest rates. You still have overall a longer term picture of dollar strength. In the short term, you can see that the yen is indeed fighting back. What else should we look at? Let's look at, guess what? Let's look at gold as well. Gold on the daily account is trying to fight back slightly, currently trading at $1,712, still under that key level, which I've been watching, which is $1,727. And like I say, the interesting thing here, this is on a daily, remember, a bigger picture. The RSI is currently trading slightly under the 30. So ask the question, have we seen the yellow metal oversold against the greenback? So we'll have to keep a close eye on that. Okay, look at the dollar Swiss as well. As you can see, again, Swiss, this is on a daily, is gained a bit more strength against the dollar on the fact that we have a weak dollar in general. And like I say, that housing data, There's retail sales. When you take a closer look at it, it's really sort of like convinced the market that 100 basis points not going to happen on the 27th. So yeah, that's how it stands at the moment. Other news. Okay, now yes. Everybody who's been watching me over the last couple of sessions knows that I'm very excited about the 21st. Obviously, I'm more excited now that the ECB might indeed surprise me and do a 50 basic point rate hike instead of 25. But it's not just that. And everybody who's been watching this program knows that, of course, I've been talking about the Nord Stream 1 pipeline coming back online, because Thursday is when it's due. And don't forget, we have a huge energy crisis in Europe at this moment in time. Last week, we had President Macron, French President Macron, saying, prepare for Russian cuts. So, with general consensus, there's real fear here. And today, EU Commission Han, he says, speaking in Singapore, we are working on the assumption that it doesn't return to operation. So basically, they are convinced it's not going to come back on. So they're already preparing. Don't forget, yesterday I said how the EU is talking to its members saying, please control your consumption of gas. We are in serious trouble. The International Energy Agency said, guys, if you don't consume or reduce your consumption of gas, you're going to be in for a very hard and long winter. So there's more warnings. But now the EU Commission Han, in a speech, like I said, he's basically saying we are working on an assumption that it doesn't return to operations. And he also mentioned we are working on many different scenarios. So they are preparing for it. So yeah, again, more fuel for the fire on this key story. So it'll be interesting to see that. On other things, let's have a quick look. Oil, by the way, is come under pressure today. We have a quick look at that as well. The reason for it, again, is the fact that there is general fear now of another lockdown in China. We've had more COVID-19 cases in China as well. And don't forget, they have a zero tolerance policy when it comes to COVID. So you can see that oil is still trading under $100 as it stands, currently trading at $97.89. So, yeah. So the big news headlines, other things to come out. We still have UK CPI, which is tomorrow, 9.2% is the expectation. Canada CPI, Bank of Japan interest rates, not going to do something. ECB interest rate decision, are they going to surprise us? Are they going to do 50? ECB press conference, German manufacturing PMI, UK services PMI, and Canadian retail sales. And of course, the question, we're finally get the answer to the question we've all been asking for over a week. Will Nord Stream 1 come back online? As the market stands, FTSE is currently trading at 1.10%. DAX currently trading at 0.60% higher, and Euro Stocks 50 is currently trading at 1.70% higher. So teeny weeny bit of optimism. Looks like we are going to get a slightly higher opening in US stocks this session. I mean, on the back of obviously the concern after the Apple report came out yesterday, which I spoke about this morning. So let's see if this rosiness can keep on, and let's see how bad these earnings for Netflix really are. Is it as bad as we think? Worse? Or is it better? We'll have to wait and see. Don't forget, you can ask me questions anytime you wish, or simply just say hello if you like. This is Tixee Live after all, and live does mean live. So feel free to ask me anything at all whenever you wish, if you have anything. Or, like I say, simply say hello if you like. I mean, how is everybody today? Everybody having a good day? Yeah. Well, like I say, don't forget, of course, if you come up with a question later or you think of something later, don't forget you can put it in the comments below, either on YouTube or Facebook. I will see them and I will reply to that question live next time I'm on air. So you always have that option too. So don't forget that. Hello. Oh, hello, Philip. Hello, Philip. Nice to, hello there. Hope you're well, sir, and hope you're having a good day. Thank you for saying hello. Thank you. So don't forget, you've got those options to leave questions in the comments for me as well, if you ever wish to. Okay, if there is no other questions or any other things you want to ask me, don't forget, I'll be back online again tomorrow at 8 a.m. UTC, and again tomorrow afternoon at 1:30 p.m. UTC. It'd be interesting to see the UK CPI tomorrow. Going well, mate. You too. Thank you, buddy. I really appreciate that, man. That's good. That's really good. I'm glad you're well, buddy. I really am. So yeah, that's going to be really interesting to see the UK CPI, 9.2%. If it does come in at 9.2%, then that's obviously going to be a new 40-year high. So that's going to be quite interesting. And I think when it comes to hey, oh, brilliant. Thank you, my friend. Hey, James, have a great week. My friend, you have a fantastic week ahead of you too, my friend. Thank you for saying hi. You have a fantastic week too. It's always a pleasure to see you. Always a pleasure to see you. Like I said, I think that's going to be quite interesting because I think the UK, though they were the first central bank to raise interest rates, they don't have as much sort of like ammunition as, say, the Fed does. So it'll be interesting to see how the sterling reacts to that CPI tomorrow. If it does indeed come in at 9.2% as expected. Okay, well, thank you, both those two fine gentlemen who said hello, and that's so brilliant. I really appreciate that. Like I say, though, so I'm back online tomorrow, so please come and join me, both at 8 a.m. UTC and at 1 p.m. 1:30 p.m. UTC as well. So please come and join me for that. Anyway, on that note, like I always say, if you're watching me on Facebook and you enjoyed this little episode and you found it useful, by all means, give us a follow if you like. There's another thing. Thank you very much. You have a great week too. Thank you. Like I say, if you're watching me on Facebook and you like it, by all means, give us a follow. If you're watching us on YouTube, and again, you found this program interesting and insightful, subscribe if you like. Hit the notification button so you know next time I'm going live. If you found this little video interesting, useful, and you put up with me, my over-the-top enthusiasm about the market, which I just simply cannot help because I love the markets, give me one of these. I see I've got a couple of likes already, which I really appreciate. I really do, because it's nice to know that you like what I do. But anyway, till next time, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.